Ever wondered how businesses keep their finances in perfect order? It's not magic, it's the accounting cycle. And today, we're going to break it down, step by step, so you can master it too. Ready to become a numbers whiz? Let's dive in. First things first, what exactly is the accounting cycle? Think of it as the financial heartbeat of a company. It's a series of steps that businesses follow every accounting period to record, classify, and summarize all their financial transactions. From the first sale to the final report, this cycle ensures everything is accurate and organized. The journey begins with step 1, identifying and analyzing transactions. Every time money moves, a sale is made, a bill is paid, supplies are bought, it's a transaction. The key here is to analyze these events using source documents like receipts and invoices to figure out how they affect the company's financial position. This is the foundation for everything that follows. Next up, step 2, recording transactions in a journal. Once we've identified a transaction, we record it in a journal. This is the first official entry in the accounting books. We use a system called double-entry bookkeeping, where every transaction affects at least 2 accounts. This debits and credits system is what keeps the accounting equation, assets equal liabilities plus equity, in perfect balance. From the journal, we move to step 3, posting to the general ledger. The general ledger is like the master file for all your accounts. We take the individual entries from the journal and post them to their respective accounts in the ledger. This gives us a running total for cash, sales, expenses, and every other account, making it easy to see the balance of each one at a glance. Now, it's time for a check-in with step 4, the unadjusted trial balance. Before we go any further, we need to make sure our debits and credits are still equal after all that posting. We list all our accounts and their balances. If the total debits don't equal the total credits, we know there's a mistake somewhere that needs to be fixed. It's a crucial quality check. As the accounting period ends, we hit step 5, recording adjusting entries. Not all transactions happen neatly within the period. We might have earned revenue that we haven't received cash for yet, or used up an expense that we paid for in advance. Adjusting entries help us account for these items, ensuring our financial statements reflect the true economic performance of the period. This is all about accuracy. After making those adjustments, we prepare step 6, the adjusted trial balance. Just like before, we're making sure our books are balanced. This new trial balance includes all the adjusting entries we just made. It's the final proofread before we create the most important documents of all. And that leads us to step 7, preparing financial statements. This is the moment of truth. Using the balances from our adjusted trial balance, we create the key reports, the income statement, which shows our profitability, the balance sheet, which gives a snapshot of our financial health, and the statement of cash flows, which tracks how cash moves in and out. These statements tell the story of the business's performance. We're almost at the finish line. Step 8 is closing the books. At the end of the period, we need to reset our temporary accounts, like revenue and expenses, to 0 so they're ready for the next period. We transfer their balances to a permanent equity account, like retained earnings. This officially closes out the period and prepares us for a fresh start. Finally, we have the optional but highly recommended step 9, the post-closing trial balance. This is one last check to ensure that only our permanent, balance sheet accounts have balances and that, once again, total debits equal total credits. It confirms we're ready to start the next accounting cycle on the right foot. And that's the entire accounting cycle in a nutshell. From that first transaction to the final report, it's a logical, systematic process that brings order to the world of finance. It might seem like a lot, but once you understand the flow, it all makes perfect sense. Thanks for joining me on this financial deep dive. I hope this breakdown helps you feel more confident with accounting. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe for more content that makes complex topics simple. Drop any questions you have in the comments below. See you in the next video.